Ladies and gentlemen, welcome to the Fintech Frenzy. To those that are saying late, absolutely not. Good try. 8:30 all day long. All right. Now, we have little bits of news today, but they're important pieces of news, stuff that I have to cover. But SoFi, PayPal, Shopify, and then just general market news and tech stuff like Amazon and general market AI demand that I want to continue to talk about, not just on the Stargate project, but other things that are happening in the markets. Hopefully, everyone is doing well. Now he's definitely late. Roto, man, getting on my nerves. How's everybody doing? Morris, hello. Formal hello. All right, let's jump into it. First, I wanted to cover two main things. Some sad news that I ended up seeing from PayPal and some general sad news for a different reason on SoFi. Okay. Let's go ahead and talk about PayPal first because this is quite interesting. Oh, no, I can't have that up. Sorry. Almost gave away what our what the company that we're breaking down later today is. Don't want to be giving that away. I had it up. I was listening to one of their earnings calls. Okay. PayPal's chief product officer to leave. Now, if your name is Crossroads, you immediately know who this already is. If you're not named Crossroads, you might not know this. This is a man named John Kim. Okay, John Kim has been around PayPal for some time, not an extremely long amount of time. I think he joined in 2018, if I remember correctly. He was a big reason for the buy now, pay later products, for a lot of innovation on the PayPal checkout side for new ancillary products that have ended up coming out. And to see him leave, I wonder. It just gets me thinking. Is this a disconnect between John Kim, who was hired under a different manager, Dan Schulman, and what Alex Chriss might be getting into? Obviously, they did their stint over a year or so with Alex Chriss, but now there's a little bit of a departure. And that's not unusual for PayPal over the last 12 months. There's been so much high-level management shakeup, okay? But I liked John Kim. I didn't know a lot of the other managers, or at least they didn't make any sort of real name for themselves. But we got to learn who John Kim was because of his position in the company and his presentations whenever they did the earnings presentation, the investor presentations. They were showing off all the new products that they were working on, all the successes, and John Kim was a big part of this. I liked the way that he spoke. I liked the way that he thought about the problems. But we don't know. I mean, this could be a problem that is family or health related. It might not even have to do anything with what's going on with PayPal. So this is sort of the problem if you fall in love with a certain person at management. That's the reason why you're there or something like this. That does pose some level of key man risk for you, right? In this position, or really in any position in the stock market, if that's your reason for being there. Now, it isn't. Okay. I wasn't like, oh, you know what? I'm a John Kim diehard, but I was a fan. All right. Now, let's jump really quickly over to Shopify before we jump into SoFi, because there was an interesting article that came out from Paul Treiber, who was talking about Shopify's likely Q4 beat, but yet a massive sell-off in the stock is what's expected from him. Okay. RBC Capital Markets says a couple things. One, data from several third-party sources indicate that Shopify's Q4 earnings numbers are likely to land above consensus expectations due to gross merchandise volume and margin strength. Okay. They could see strong reads in the e-commerce spending and job postings, suggesting an earnings beat, despite merchant growth appealing to have incrementally slowed. Now, the firm warns that Shopify on earnings day could actually have a possible light Q1 guidance, which will lead to them having a decline of 17% on average over the last 3 years. So is that trend going to continue? We could see a nice pullback in the stock. The advice to investors is to view a pullback in the outperform rated e-commerce stock as a buying opportunity ahead of what is expected to be a strong growth momentum through to the end of 2025. Thank you so much for that. Paul, if anyone knows, this is a big name for my portfolio. I'm not going to be trading on any sort of idea that Q1 weakness is there. I hope that 2025, that he's right, that they're going to have a strong year, but I continue to just believe in the overall mission statement, and that for every one merchant that leaves Shopify, 47 more come onto the platform. So with churn that low, with market share gains that high, I don't worry about trading. I worry about essentially world domination in commerce, not just e-commerce. I don't even like calling them an e-commerce giant anymore. They're getting into commerce. All right. Where is Nala? He's lurking. That's funny. I like that. Where is not a lurker? He's lurking. Where is Roy? He had GameStop. Yeah, so this is on my news too. Now, as far as I can see, I'm actually looking at it right now. GameStop is up 2.86% in the overnight markets right now to 28.44. This is a company that Roy has shown some significant interest in over the last little bit, having a whack ton of cash and potential opportunities to get into different markets that could utilize them having a bunch of branches with things that simply would have a very hard time going digital, like Pokemon cards, baseball cards, stuff like this. Probably is not going to turn to the NFT market as quickly as maybe some crypto people would hope for. So he's getting really into that company. And although I'm not following the company essentially at all, what it seemed like was a Roaring Kitty tweet of him showing some dog that is laying down. I think it's like a Family Guy. Here, I can show you. I mean, maybe I can't. Who knows? I don't know if this is like some sort of proprietary or sorry, IP thing that I'm not allowed to share, but we'll do it anyway. So Roaring Kitty posted this where time is going on and on and on, and the dog is still stray. That's the only news that I can find on GME going up at 1.4%, but yeah. I don't know why that would indicate that it's GME. That seems more like a signal for Chewy or one of these other positions that he was potentially looking into. GME is doing grading now? Well, no, but that's the hope for what they could get into. I think that would be a good acquisition target. It's definitely been floated by quite a bit. And yeah. That would actually get me a little bit interested, because I do know that industry is growing quite quickly. And if there is no real mania anymore, well, with the backdrop that it could get manic, but it's not right now, and that the valuation actually might be compressed. I haven't looked into it, but if Roy's interested in it, it does get me to want to start to look into it. Then again, I want to buy companies that are good for a long term. Who knows? Seems more like a trade. He tweeted one tonight. That was tonight. That was 37 minutes ago. That's what I was just showing. He tweeted 37 minutes ago about some dog cartoon. I think it's Family Guy. I don't know if I'm wrong. There's a lot of I forget the guy who does that. What's his name? But he has a lot of things that look and have that similar art style. Surprised that Unity has not pumped. I'm out of Unity now. I don't have to worry about Unity any longer. I never wanted to have that company, by the way. Wasn't my idea, but yeah. All right, let's go ahead and talk some SoFi really quickly, as this is a lot of fun as well. So one, Giuliano Bologna came out and gave a $6 price target on SoFi, up from $4. Woohoo, right? 50% increase. Love it. Now, a big reason for why he actually did raise the stock price is that he changed the way that he looked at valuing the company. He's valuing it now at a 1.2 times forward expected tangible book value for 2026 at the end of 2026. 1.2 times. Okay. Here's the thing about Bologna here. I went through and actually looked at some of his reports in other companies, and he does well. Okay. Based on the companies that he's looking at. Now, you're going to notice something. Once we start getting and looking at some actual fintech names, retail specific fintech names, he has a much different approach. All right. SoFi, sell, down 77%. However, he did change to $6. It hasn't updated yet. Upstart, sell, downside 86%. Okay. And last one, Affirm, sell, down 65%. So anything that is consumer related fintech, these sort of hot button names, he absolutely despises. It's really some of the only sell names in his entire thing. If we continue to go down, you can see another sell here, but this is May of 2020. The more recent ones, which is Affirm, is at least 2024. Okay, April of 2024. Anything around this time, we're starting to get really outdated. And then you can go all the way down here and see like a sell for H&R Block 2016. Okay, so like we're almost 8 years or more than 8 years, almost 9 years away from there. Crazy. So let's focus on what he's done recently. SoFi, Upstart, and Affirm hates. And he loves a lot of companies, but and Lending Club. But even then, he's not giving it a crazy upside like what some other analysts are giving it. But even then, they are being priced like a bank. Okay? So it's not that I actually think that he looks at the company bullishly. Like, if you read the report, I have it in front of me right now. He thinks that the tech platform growth is going to be accelerating. Margins are going to be accelerating. He sees success in personal home loans and student loans. He thinks that the market share for SoFi's personal loans are going to be dominant. Like if you even look at some of the things in his report, like this is crazy bullish, showing off that he's very excited about these things. He thinks like originations on personal loans is going to continue higher. If you look at Q2 expected 2026, you're looking at like $6.6 billion of originations. So these are not small growth rates, The lines showing these exact lines, he's putting them in parallel here. Where could the market share potentially be going? At what point do you sort of find market saturation? But then SoFi has to get creative. SoFi needs to expand their credit box. SoFi needs to get heavily into home loans, which, by the way, they are doing greatly right now. If you look at any of the job postings that Vadim is sharing online, we can bring up the last one. It's all home loans. It's home loans and anti-money laundering stuff. Okay, so here let's go ahead and bring this up. So what I really like is what is the potential for SoFi in home loans? What percentage of the total addressable market do they have there? For data senior data analyst or data scientist, home loans. Staff data scientist, home loans. There's a bunch of servicing things. Borrow, you could potentially put that under home loans as well. Senior software engineer for home loans. Let's see what else. What else do we have in home loans? Director of home loan sales, home equity business lead, director of home loan sales, home loan senior credit manager, pricing lead, home lending, senior pricing analyst, home equity, pricing director, home equity business lead. It's all home loans. It's home loans and anti-money laundering stuff. Tired of clickbait. What's sadder news than an analyst that puts out a report from $4 to $6 whenever the company is at $18 a share? Tell me how that's clickbait. Seems sad to me. Maybe you don't own the company. Like, it's pathetic. Pedro, honestly, they're doing the same for me as well. I'm not even an American citizen, and yet they email me all the time saying, hey, you should get a home loan. You should get a personal loan, everything like this. So I see that they have, a want to be in those markets for sure. A lot of appetite. Yeah, instead of sad, I meant more sad, like pathetic. Like it's sad to watch that they're pulling out these stops whenever, you know, they're trying to do this. I only have about 20 characters to explain what I could potentially be talking about. I don't even look at the title. I mean, that that's where you got to get eventually. Okay, so let's go back and talk about G here again real quick. Yeah, but he is quite bullish. It's just the way that he values the company. All right. Now, there was actually some pretty interesting news today from the tech side. A little bit sad here for our Quebec neighbors here up in Canada. But Amazon is shutting down their Quebec operations, cutting 2,000 jobs, and closing all warehouses across Quebec. Why can't I read? Affecting nearly 2,000 workers, including 300 from the province's first unionized facility. I really cannot read today. All right. Jeffy B there. But yeah, sad. I don't think that they'll be leaving all of Canada, but I sure hope things change here to make it a better space for them to be. But literally a warehouse just opened very close to where I live. So things I think will be fine in the Canadian market. Obviously, North America being the largest part of their overall business for Amazon, and then international, they count more externally. They look at it both by North America and then international. I have quite the spreadsheet on Amazon, by the way. If anyone's interested, we can do a breakdown on Amazon one day. I've got a lot of data on them now. So a good way, if there's a good amount of you that are interested in learning more about Amazon, the types of stuff, that'd be a fun DD to go through. Which, by the way, after this at 9:15, I'm going to have to jump off like at 9 or a little bit after, because we are doing a course member only live stream, and I'm going to try to break down a new company every single week. I think that that'll be a good habit to get into. 52 new companies fully broken down every year. I think that's a good way to get a lot of due diligence. It's going to make me push harder. But I'm going to be interested in hearing what you guys think about the first company that I'm breaking down. I'll hint at it a little bit because this is quite interesting. Let me just go to the 1-year chart. Oh gosh, this doesn't actually show me. One second. Let's see here. Let's see if you guys can get any guesses in the chat. On a 1 year, this company is up 131.7%. I'll put that in the chat in case people want to try to match it. It's actually 131.69% in a 1-year performance. Very interesting. Very interesting stuff. And by the way, we are expecting very, very strong Q4 numbers. Tanner, is the member only? So no. If you get the growth investing course, you get full access to every single course member only live stream. So those are for only course members. Reddit, ooh, little interesting, but not that one. It'll be fun. Should I say the market cap as well? Maybe that might bring it down a little bit. The market cap is just shy of 16 billion. 16 billion. So lots of potential growth here. Not the biggest in the market, not by a long shot, but potentially one of the fastest moving. And I'll leave it there. We're gonna have some fun tonight. Okay. That being said, let's go ahead and look at this next piece of news. South Carolina to reboot giant nuclear project to meet AI demand. Okay. So what they're saying is that this company is now tapping financial advisors to look for buyers that can restart construction on a pair of nuclear reactors that have been mothballed years ago. So they're looking to restart construction. They might need a little bit of capital here, but do you understand how bullish this is for the markets, that everyone is realizing that they need to get these things started again? I mean, long tailwinds for overall sectors, not just AI, not just internet, not just cloud computing, but all the, secondary and tertiary different companies that you can buy that will benefit off this. Just a digital movement in general. Very, very exciting. And look to marketplaces to benefit from this as well. Not only will Amazon benefit from being an AWS player, but they're also going to benefit from being the warehouses, the centralized, shopping mall, essentially, for all of these things. So as AI comes, it's only going to help people find better products, potentially help merchants get onto the platform, offer their services better, will help them display ads better to better people, receive more money for those ads. It'll help them with essentially everything. I have not seen anyone guess the company yet. I'll say that. Joseph says, do you like the cybersecurity sector? So I actually had a cybersecurity play. I just sold it last week. And I'm bullish on the area, obviously. And they will all do very well as things get, further along. But it's not like Microsoft doesn't play in the cybersecurity space. It's not that, Google doesn't play in this space, or AWS. They all do. Right. So I actually think that a lot of the cybersecurity plays are going to be played at a much, more like infrastructure level, like where people are actually getting on. I think that's where it'll be done. Ooh, I love some of these guesses. These are potential future episodes, but not this episode. Very interesting. If there is stocks that you guys want me to cover going forward, I'd love to know. You can always leave them in the Discord chat, something like this. Maybe we can put them in the Discord suggestions or something like this. I'd love to do them. What are we guessing? Oh, it's I'm going to be breaking down a company tonight on the course member only live stream. And it's a company that's gone up 131.69% over the last year, 365 days. And it's got a market cap just around $16 billion. but I'm not saying what it is until 9:15 when the stream actually starts. Sector, I can't say this. It would give it away too fast. I think it would give it away too fast, but maybe it's just because I've been looking into them a lot lately. I do not own the stock. I've had my eye on the stock forever. Well, I mean, okay, here's another hint. The stock has not been around forever. It's quite a new company. But since it's been around, I've had my eyes on it. All right. That is a hint. Okay, what else could I do for a hint? I don't know. It'll give it away. I use a lot of their products. There you go. All right. Let's take a look at some overnight movements in some of these companies. It sucks that Moomoo, because I actually do like the UI for Moomoo much better than Webull. They are very similar, but I've gotten used to one over the other. But I'm using Webull again because of this overnight segment. So we'll be using Webull until I have it on Moomoo. Let's take a look here, though. Nubank up to $12.17, up 1.5% in after hours. Palantir sort of staying flat. Remember, all the volumes on all these overnight trading companies are all very, very low volume. They can change quite quickly. What you want to look for is the large spikes in overnight trading volumes, because that could potentially sign that, you know, there's new news here, or something that could potentially be showing us why people are bidding on it in overnight markets. Other than GameStop, I think that'll probably be the biggest one tonight that we see a big move. But yeah. Ooh, Bitcoin at 102, under 103. Wow. Yeah. I don't use Webull also, so my watch list is not as updated as my Moomoo one is. Okay. ChatGPT sucks. Who says AI is the future? It can't even figure out your clues. That is too funny. That's too funny. Well, it's definitely not Jobby. Yeah, I mean, Tom's right. I don't use their products. Who does? That's a good one. I should do Tempest. That would be a fun one to do. I'm not really in that space, but if Nancy's got her eye on it, I should probably focus a little bit. Black coffee to seal the night. What happened to SoFi? SoFi got a report. Sorry, I just kicked my desk. SoFi got a report from Giuliano Bologna saying that this is a $6 stock all day long. I don't think that is, the right call. And it's just sad. I think it brought the stock down a little bit because institutional investors do follow their, their news. And I don't know. It's just a little bit disheartening seeing this type of stuff, because they are very bullish on the company. They're just weird in the way that they actually value the company. Like, it's weird how two analysts can see the exact same outcome, have the exact same 2026 EPS, which, by the way, they still think is going to be super low. I think they said 47 cents. SoFi says at the minimum, they're going to get 55 cents. At the minimum. And yet they think it's a $6 stock. Is SoFi dropping after earnings if they miss? Yeah, 100%. Like any company would, right? If there's a miss and people are suspecting one thing and they get less than that, they will miss. It's just a matter of what's the chances that they do miss. That's sort of the next thing. If you go ahead and pop open, some sort of, like, I can do this with my spreadsheet, but what they've said they were going to do versus what they actually did, they've never missed. So we don't expect them to miss here, especially on great earnings like what we've saw, or great macro like what we've been seeing. But you can see here, whether you're looking on it. Sorry, sorry. There's going to be a flashbang. I'm going to change this over to white. All right. Sorry. Revenue expectations versus what we actually received has been nothing but positive. Okay. Every single time that a quarter has come about, you can see this here. We've either beaten by 3.5 million, 13.8 million, 47.8 million. There's never been a negative time. We've never missed on earnings. Then if you look at EBITDA, we've never missed there either. And then if you look, although it's been brand new, net income expectations, we still have not missed. So things are not expecting to miss at SoFi. That's for dang sure. Does my secret company have a PE above or under 20? Above 20. Above 20. Quite a bit above 20. There's some interesting guesses in the chat, but I'm not going to be giving it away. Canadian or US, he says. Bobby D says Canadian or US. Obviously US. You think I'm Canadian by birth? I live here. But I prefer not to buy stocks here. So, should I just say what it is before we go? Because it has been said in the chat. Someone's gotten it. Grab. Well, let's check. Let's see if Grab. No, maybe I should do one on Grab. Obviously, there's a lot of interest in it right now. There's just a lot of unanswered questions that I wouldn't be able to go through. Like, I might need a little bit longer than a week to break this company down. But, yeah. All right, ladies and gentlemen, I'm going to let you guys go. If you're interested in watching the course member only live stream, you can go to futureinvesting.pro and you'll get an invite to the link or to the stream. But I got to get going, get ready for the stream, and I'll see you guys tomorrow. Exciting times for fintech and for markets right now. Honestly, I could not be more bullish. Bye for now.